Welcome to today's webinar. I'm Dagan, Executive Director of Peak Asset Management, and we're very lucky to have Cath, Whitaker, CEO of SelfWealth, also Geoff Drucker, CEO of Countrywide Renewable Hydrogen, and Richard Tegoni, the Chairman of SECOS. For those at home that don't know about ESG, environmental, social and corporate governance is really about evaluating the firm's collective consciousness for social and environmental factors. There's a growing number of governments are setting targets due to mainly to global warming. And in 2015, the Paris Agreement really sets out a global goal to reach net zero emissions in the second half of the century. ESG funds have also been able to perform very, very strong returns as we head into 2022. And examples of ESG, environmental, which is conservative of the natural world, so looking at air, water, climate change, social responsibility, and really government, which is board composition, audit committee, and the structure. And what we are seeing as well from a peak asset management view, we're really seeing a number of ETFs, exchange-traded funds, which are focused on clean energy, renewable energy, cybersecurity. So, for example, iShares have created a global energy fund. Paramasu, a core equity fund, and iShares as well, and Vanguard, which is an index fund, really looking at the social index side. So on that accord, I just wanted to make an introduction to Cath Whitaker, CEO of SelfWealth, to give an introduction. Cheers.
Yeah, thanks very much, Neven, and welcome everyone who has joined us today. Great to have you on the webinar. So as Niv has mentioned, I'm the CEO of SelfWealth. For those who may not know SelfWealth particularly well, we are Australia's most popular, low-cost, high-volume trading platform. And we've been helping Australians build wealth for almost a decade now. So on our platform, you have the capabilities to buy, sell your Australian and American equities and ETF solutions. And we also have a HIN-based model. So legal ownership of shares is always guaranteed. As Niv has mentioned, I am passionate about ESG and about ethical investing, which is why, from a SelfWealth perspective, we anticipate this will be the first of many webinars within the ESG space. We're committing to that investment by having greater content, greater access to the people who you're going to meet today, hearing real-life stories about how business can not only work, but perform at a much higher level with ESG contained within it. We're also very committed to ensuring that you have the very best data and knowledge at your fingertips to make sure that when you're thinking about ESG investment decisions, that is readily available to you. We're also going to be creating communities around ESG for those who are interested in it, so that you can make sure as you're making those investment decisions that you're going to be making the right ones. So with that being said, I'd like to introduce to you an additional webinar participant, Mr. Richard Tegoni, who is Executive Chairman of the SECOS Group.
Thanks, Cath. Yes, I'm Executive Chairman of the SECOS Group. We've been around for about 10 years, and our mission has been to develop sustainable packaging, and mainly in the plastic space. We look at anything, whether it's trying to make plastic out of using less oil, making it in some way more sustainable, but our prime goal is to make it compostable. When you understand the plastic problem, the best thing to do is to just simply look at the recently released Australian plastics plan, and the sort of numbers they've published recently are probably indicative of what you'd see anywhere around the world. And what they've said is that there's over 3.5 million tonnes of plastic being used in Australia. And that's expected to grow or double by 2040, which is an extraordinary amount of plastic that we're going to see in the world, in Australia, but that similar numbers are happening all over the place. 1 tonne of that is single-use plastic. SECOS's focus in our product development is to replace single-use plastic with a compostable alternative, so that plastic doesn't take over 500 years to degrade in the environment, and it usually, when it does degrade it does so in an unsafe way. The idea of a compostable solution is to make sure that when it is used, it can be turned into or composted back into a safe fertiliser and replenish the economy in a true circular economy principle manner. It's not just about the environment, it's a health issue. which is why our products look at compostable, safe compostable and degradable solutions. We know that from the National Plastic Plan that over 113,000 pieces of microplastic get digested by humans annually. So that, plastic seeping into our environment is becoming both an environmental risk but also a significant health risk. SECOS focuses mainly in the flexible plastic space. So we have three prime categories, one being resins, which our proprietary technology sits, so developing a range of resins that can then be used by converters and made into soft plastic films, so compostable films, biohybrid films that use less oil, and from those films they can be turned into products that we make, which is a range of bags, whether they're dog waste bags, whether they're kitchen council bags, retail bags, a whole range of bags, courier bags. But we also sell our films to converters that turn them into other products such as nappies and feminine hygiene products, pads, medical drop sheets. And the range of products that we're seeing open up in the market is expanding quite rapidly. Areas in agriculture, looking at agricultural film to grow crops using a compostable solution rather than a polyethylene solution, and a whole other range of products that are opening up. So SECOS recently announced that we're launching an R&D centre. Our business is focused on the development through intensive R&D investment, developing and launching new products into the market as those products become viable. And what I mean by that is there's a range of plastic products in the market that were designed to last a long, long time, and other products were designed to last for just moments, like a single-use plastic. And what that means is, what we mean by a single-use plastic is where, for instance, a shopping retail bag, you would carry your shopping to your car, you might use the bag for a matter of minutes or only an hour, and then that bag would remain in the environment, usually ending up in the landfill or the ocean for 500 years. So our job is to replace those single-use plastics with a solution that is compostable, which is where our technology lies. So our business, we do about, based on the fourth quarter results of 21, we're on a run rate of about $35 million in sales. We grew by over 43% year on year. And we posted this year, we're due to announce this Friday on our annual report our maiden profit, which is around $2.6 million, including some tax losses that we've managed to finally bring onto our balance sheet, which were there as our original investment into the technology of the company. So our bioplastic sales are growing by 129% year on year. We also have a traditional plastic in the hygiene space that hasn't really been growing, and where our strategy is to replace the traditional hygiene plastics with compostable solutions to get into the hygiene market with to target nappies and other hygiene products. So we see the growth opportunity for SECOS continuing over the long haul. The opportunity and the growth runway is looking very encouraging, because the plastic market in itself is just so large, and more and more products are becoming viable. We don't just look at products that are environmentally friendly. We also target products that provide some sort of economic benefit, and that usually relates to categories such as food, where bioplastics is effectively a type of food. It's organic, and there's a huge environmental benefit in separating food, as a lot of people may have noticed recently with local councils rolling out food separation programs where you no longer put food in your landfill bin. You're being asked to put your food in your green bin, and that food is being taken away and composted in a composting facility. And our products, our compostable kitchen bags, allow people to separate their food waste in a hygienic, clean, and safe way, so that food can be separated and put into the green bin. So there's a case where councils have, over the years that we've been dealing with them, shown that they've achieved a huge economic saving by using compostable plastic bags instead of traditional plastic bags, and getting households to separate their food waste. So not only are they helping the environment, because that food is no longer being dumped into landfill and causing methane gas, which is significantly more toxic to the environment, but it's also reducing the cost of that landfill. So there's both an economic benefit and an environmental benefit, and they're the areas that our SECOS will be targeting over the coming years. Thanks, Cath.
Thank you, Richard, for such a thoughtful overview. And, it's often said that sometimes with the biggest problems, such as single-use plastics, it can create the greatest opportunities. So we're going to be really excited to hear in a moment a few questions that we have for you. Now I'd like to introduce you to Mr. Geoffrey Drucker, who heads CRH. So, Geoffrey, could you please provide an overview?
Thank you, Cath, and thank you for the opportunity to participate in today's webinar. I really appreciate the opportunity. Countrywide Renewable Hydrogen is an originator and developer of renewable hydrogen projects. The impetus for us to move from originally being a renewable energy business into the hydrogen space really came from the federal government's National Hydrogen Strategy, which was prepared by Dr. Alan Finkel, where he recognised that hydrogen is going to be a fuel of the future. And as we see so many countries now having emission-free targets of 2050 and prior to 2050, the opportunity for hydrogen to be the fuel of tomorrow is very real. Renewable hydrogen means using renewable energy resources to produce electricity, and that electricity being used to split water into hydrogen and oxygen, and both are products that are marketable. Hydrogen being the product that will be used in mobility, in powering trucks, buses, ferries, ships. There's also a lot of work being done in the United States in terms of developing a jet fuel, a replacement jet fuel using hydrogen. So there's great opportunities in the mobility sector. Hydrogen can also be injected into natural gas networks to decarbonise natural gas, and in some places quite significant volumes like Tasmania. The Tasmanian gas network can take up to about 30% hydrogen, whereas mainland gas networks, which are older, can take about 10% hydrogen, but it does decarbonise the natural gas. There's also an enormous volume of diesel that's used in power generation, whether it's portable electricity generation, whether it's standby electricity generation, or whether it's remote location power generation on islands or in remote communities. This is where we can decarbonise that fuel use with the supply of hydrogen. So what we do at Countrywide Renewable Hydrogen is we look at opportunities to deliver hydrogen to offtakes in two markets. One's a domestic market, so where can we use hydrogen domestically to supply the mobility and gas networks with hydrogen? And then what are the export opportunities? What countries have programs and policies that mean that they're going to need to import hydrogen or hydrogen derivatives like ammonia, like methanol, for their future energy needs? So we focus on not only the offtake opportunities, but also we have to focus on renewable energy and what are the renewable energy resources that are available. Because all of our projects are long life projects of 20-25 years, so we need to know that wherever we site a project, we've got a long-term supply of renewable energy guaranteed. And the guarantee is underlined, it's in capital letters, because unless we can guarantee that that energy is renewable, we won't have market opportunities in the export nations, because they'll require us to almost have an audited system to guarantee that the energy that's being used to produce the hydrogen is green. That's a critical element for it. So we look to areas where there's opportunities for us to locate a project because of the renewable energy support that there is. Areas where there's obviously a supply of water because we're splitting water into hydrogen and oxygen. We look to areas where there is a port for the export of hydrogen to the export markets. But most importantly, we need to have offtakes. We need to have a line of sight to customers for our projects, because no customers, no project. It's a critical element to making a project bankable. The second slide that I'm presenting to you outlines our key projects that we've got in Australia. We have a project in Tasmania, which is called H2Tas, and that project is being developed in conjunction with, or collaboration, I suppose I should use as the word, with the Tasmanian government. The Tasmanian government has a goal of making Tasmania a hydrogen state, and we're working closely with them to deliver hydrogen for the mobility sector. In Tasmania, that comprises buses. There are probably half the buses in Tasmania are government owned, the other half privately owned. The road transport network, so the semi-trailers and rigid trucks that are transporting goods within Tasmania, another target market for us. With road transport, Tasmania is an ideal location for such a project purely because all the buses and trucks stay on the island. They don't go interstate, so we don't need to have a refuelling network interstate. We just need a refuelling network in Tasmania. And to refuel vehicles in Tasmania, we probably only need a maximum of 6 petrol stations or service stations offering hydrogen to customers. So it's being a really compact state and a small state, it's a very viable location for a project. H2Tas has a long-term view of being transitioning to an export project, and to that end we're in deep discussion with customers from both Japan and Korea. And both those countries have got very, very strong policies in terms of decarbonising their economies to the point where no coal, no carbon-based fuels will be used in the future in those countries. Our second project is called the Melbourne Hydrogen Hub. We were approached by the bus industry, the Bus Association of Victoria, to supply hydrogen to 3 bus companies, and they will be transitioning a total of 90 buses from diesel to hydrogen. That project is slated to happen in the northern suburbs of Melbourne, in the suburb of Epping, which is a transport corridor. And that project will be focused on domestic hydrogen supply. It'll also be supplying hydrogen to the natural gas network, which is right outside the site that we have earmarked for this project at Epping, which is an encouraging offtake for that project as well. And our third project in Australia is called H2 Port. It's at Portland in southwest Victoria. The reason for selecting Portland reasons for selecting Portland are, one, the electrical infrastructure that is down there, because of the smelter that Alcoa owns at Portland. There's a massive electrical infrastructure down there. 2, the volume of renewable energy generated down there. There's a number of wind farms in the area, and a new one that's being built, will be built, which will be about 1 gigawatt in scale. So it's a massive wind farm. And then also the fact that Portland has a very sophisticated and well-advanced port in terms of its infrastructure. And the final reason is that it's a very, very large agricultural zone. It's called the Green Triangle, which spreads across into South Australia, into the limestone coast of South Australia, where there's a number of agricultural interests that want to decarbonise their operations, whether it's decarbonising their actual on-farm use of energy, or mainly in transporting the goods from farm to port. And the timber industry is one of the key target markets for us in that regard. So there are our key projects that we've got. We're also progressing projects in Pacific Northwest USA and in Atlantic Canada, because there's opportunities there for us to replicate our Australian projects in those locations because of the abundance of renewable power that they've got in both of those locations. Thank you, Cath.
That's terrific. Thank you, Geoffrey. And, so much endless opportunity with renewable energy, as you point out, not just in Australia, but also abroad. And before we get into the questions, it's just terrific to see 2 Australian companies leading the way, setting the challenge in terms of providing ESG-related investments for investors in Australia. So with that being said, we do have a number of questions. So the first one relates to the circular economy. So I'm going to direct this question to Richard. So what role does the circular economy play within the Australian economy and the waste crisis?
Look, it's a good question. It's the circular economy will become central not just to Australia, but actually the whole world economy. I think we've reached a tipping point whereby the economic case to invest in the circular economy has now outstripped the cost of not acting, which is why I think you're seeing a lot of disruption with regards to ESG technology. Look, that's because the world is starting to see the damage that's being caused from non-sustainable practices such as producing plastic that lasts and takes 500 years to degrade, compared to technology like bioplastics that SECOS produces that can be safely composted back into the environment and creating a perfect circular economy.
Thank you. And a follow-on question from that is, what are the current risks and opportunities associated with a circular supply chain from an investment point of view?
Yeah, look, for SECOS, the supply chain risks represent the greatest opportunity. The world can't switch all its conventional plastic to SECOS's certifiable compostable plastics overnight. So there'll be a constant supply chain pressure as the market adopts our technology. We don't see growth being in a linear pattern. We see it in a step change. So to manage that supply chain risk, you'll see the business put on more capacity, and as it ramps up more capacity, then you'll see step change growth. So we had a particularly strong sales growth quarter in the fourth quarter. We're putting on more capacity. Once that capacity gets on, we've already sort of said to the market, our second half will be stronger than our first half. And that's the nature of the fact that we're constantly trying to meet the growing demand that's coming to us and having to ramp up our supply chains, and all our suppliers are ramping up their supply chains. But look, that's a great opportunity, because what it means is that given the size of the plastic industry, the growth runway could go on for decades and be massive. So we see that as a major upside to the business.
Question for you, Geoff. I might just really great update. There is a lot of obviously speculation around the hydrogen economy, and why do you think it makes it so attractive?
Niv, I think there's probably a number of reasons. One, climate change is now uppermost in most people's minds. We're seeing so much happening, whether it's in bushfires in Australia, wildfires in the United States and Europe, floods in Europe. Climate change is with it. We see what's happening to the ice caps, the Antarctic and the Arctic. There's no doubt that climate change is with us, and we've got to do something about it. So very much is happening in the area of taking action on climate change. We've got many governments that are actually at the forefront of leading the world in terms of what needs to happen. And to do that, to address climate change, we need to reduce the carbon that's in the atmosphere. Reducing carbon in the atmosphere happens when you eliminate carbon-based fuels. Coal, gasoline, diesel have to be replaced with other energy sources. And the energy sources that are dominating the future are electricity with battery electric vehicles, and hydrogen. Hydrogen with in mobility, as I mentioned earlier on, and also hydrogen being used for industrial heat and other purposes as well. But there's also an enormous amount of support from the corporate world in making these changes. We've got so many companies that are following what Cath was talking about the importance of ESG investing. So many companies that are focusing their own attention on what they can do to reduce their carbon footprint, regardless of what governments are doing. The corporate world's doing it. We've got companies that are investing heavily in hydrogen. BP, Shell, leading petroleum companies, they see that that the future fuel is hydrogen and electricity. Ampol have made it clear in Australia that they need to look towards what the future fuels will be, and for vehicles it'll be hydrogen and electricity. So their petrol stations that they've got right now will start to transition from not just having petrol and diesel, but they'll be having recharging points for battery electric vehicles, as well as refueling pumps for hydrogen vehicles. We see companies like Cummins, one of the world's biggest diesel engine companies, investing heavily in hydrogen. They've acquired a Canadian company called Hydrogenics, which makes electrolyzers. That's the electrolyzers that split water into hydrogen and oxygen. And they also produce fuel cells And a fuel cell takes hydrogen and when hydrogen meets air in a fuel cell, it creates electricity, and it's electricity that drives vehicles. So that's how that whole circular economy within hydrogen works. So there's an enormous amount of investment. There's huge incentives that governments are offering, particularly in Europe, in North Asia, for their economies to transition from a carbon-based economy to an emission-free economy. So while there is speculation about the future of hydrogen, it's real, it's there, it's going to happen. There is no doubt about it.
Jeff, absolutely. Really, really good point. So on that note, another question has just come through. Which economies that you're seeing are leading the way in hydrogen, and how does Australia match up?
I'll leave the second part to last, because that's the embarrassing bit. In terms of the countries leading the world, it's North Asia, both Japan and Korea. The governments of both Japan and Korea have told their major corporates, you must eliminate carbon from your fuel use. That means that power generation that may have been coal-fired powered, or even in Japan, they're obviously shying away from nuclear after the Fukushima episode. So Japan says all of our power generation, and the same with Korea, needs to be emission-free in the future. All of their road transport needs to be emission-free in the future. So they've actually mandated that this must happen, and which is why Japanese and Korean trading companies are coming to Australia looking for the supply of hydrogen, either as a gas or a liquid, or as ammonia, or as in other forms, so that they can actually achieve what the government is mandating must happen. In Japan and Korea, there are many, many refueling stations now with battery electric recharging and hydrogen refueling, and they're going to roll out a network that would make that transition for motor cars and trucks and buses very, very straightforward. Germany is a leading nation globally. The German government is investing billions of euros in transitioning their economy to an emission-free economy. It's a major platform for all the parties in their coming federal election, and Germany has dedicated enormous resources to hydrogen being the future fuel in their country. The problem for Japan, Korea, Germany, the Netherlands is also leading the pack, is the fact that they can't produce enough renewable energy to produce green hydrogen. So they're going to have to import the hydrogen that they need. And Germany has quantified that, saying that by 2030, they will only be able to produce 15% of the green hydrogen that they need in their economy. So they'll have to import 85%. 85% of the green hydrogen that they use by 2030 will come from countries like Australia and Canada, because both countries have the capability of producing green hydrogen in the quantities that they need. Another leading nation is North America, or part of the world is North America. It's the Pacific Northwest states of California, Oregon and Washington. California is a leader in transitioning trucks, buses, cars to fuel cell and battery electric. Oregon and Washington are seen as being ideal locations for the production of hydrogen because of the volumes of hydropower that they've got. And to the second part of your question, Niv, Australia unfortunately is well behind the pack. We're still a coal-based economy, while the government is providing incentives and grants for hydrogen projects. We don't have a mandated emission-free target date. We have states doing different things. We don't have a coordinated approach in the country to becoming an emission-free. It's going to happen. It'll happen because it won't be the governments that decide on what that will be. It'll be the electorate, and with the electorate being getting younger and younger every election, young people are the ones who are the passionate ones behind taking action on climate change, and they'll be the ones who are actually forcing government to take action and start to really get behind initiatives like the countries of Japan, Korea, Germany and the Netherlands are doing, as well as the United States now under the Biden administration.
Thanks, Jeff.
Thanks, Geoffrey. So, Richard, a question for you. So, interested to hear your thoughts. What can the government or private sector do to boost the circular economy?
Interestingly, there's two other parties to that, and that is the media and the electorate, as Geoffrey pointed out, play a big role in boosting the circular economy. But the government and the private sector have, that key role, and I think it's working together in those three groups collectively are driving that change. And governments around the world are responding very differently. Some countries are mandating by law that people use compostable plastic instead of traditional conventional plastic. Other countries are just allowing the different participants in the market to work it out. Look, certainly in Australia, we're probably a little bit behind certainly other jurisdictions around the world. Governments need to prioritise compostable waste management rather than just thinking that recycling is the only answer. Recycling is critical, but what compostable plastics do is remove plastic from the waste stream before it's made, so it can be composted rather than having it to be recycled. So one of the conundrums with recycling is that when you recycle a plastic, you can do it once. It usually loses its efficacy to some point. You can recycle it again, but eventually it still ends up in landfill or the environment and takes many years to degrade. So when we approach the plastic problem, or governments are approach the plastic problem, they tend to get a lot of advice from the private enterprise players, which are predominantly the big oil companies and the big plastic companies, which are huge around the world. And I think that's caused a lot of issues, or the focus to be more on how do we recycle more plastic, which is effectively a mandate to make more plastic, rather than how do you remove plastic from the waste stream. So I think the government needs to look at this compostable technology more, invest more in compostable facilities around the countries, around the country in Australia, but around the world. By the more composting facilities that you have, the more food and organic waste, along with compostable plastic, that can be converted back into fertiliser. And it's really about going back to the past and doing what we did 100 years ago. We had it right. We would get our home food waste and we would compost it and would go back onto the soil, instead of just continually extracting fossil fuels out of the ground and then dumping them in landfills where they don't degrade until many years. It's just not a sustainable solution. So certainly governments and private enterprise have a long way to go, but I've been very encouraged in the last few years that I think there's been a significant change, a shift in attitudes across the board, which is encouraging.
Thank you. So it really is reducing the problem before it even starts and changing the behaviours across the piece. So thank you, Richard. Geoffrey, if I could ask you a question, please. So the government's national hydrogen roadmap, it's put a target price of $2 to $3 per kilogram of hydrogen to make it economical. Is this realistic?
Cath, it could be, I suppose, is the simple answer. Right now, we've got a target price of $6 a kilogram, and that will equate the price of hydrogen to diesel for road transport. So one of the questions that the road transport sector and the bus sector asks us is, what's the price of your hydrogen going to be? How does that compare to diesel? If we can supply hydrogen at $6 a kilogram, which we can, that means that the price of that fuel is the equivalent of what the cost of diesel is. We have another hurdle, and that is the price of a fuel cell, a hydrogen fuel cell truck or bus compared to a diesel truck or bus, because it's a lot more. It's almost double at the moment, but the prices are coming down significantly. But the technology for the production of hydrogen is improving very quickly, and there's new systems being worked on, developed and released. There's also an enormous volume of competition in the equipment sector. So the electrolyzers that we would purchase for our hydrogen production originally either came from Canada or Europe, mainly Denmark and Germany. But now the Chinese have entered the market, and their equipment is just as good as the Western countries' electrolyzers are, and of course, as you'd expect, a lot cheaper. So the cost of the technology, the capex that we need to invest, is coming down. So that all augurs well for us to be able to reduce the price of hydrogen being delivered. At the same time, renewable energy prices are falling as well. Maybe 2 years ago, we were looking at renewable energy from a wind or a solar farm at around $70 a megawatt hour. Right now, we're looking at around $30 a megawatt hour. So that all means that we can, as we drop the cost of the input, being electricity, the cost of water is incidental to the hydrogen price. I guess unless you're in an area where there's just no fresh water or no access to fresh water and you've got to desalinate seawater. But the cost of electricity is coming down, the capex for the production of hydrogen is coming down. So there is an opportunity for us to actually achieve a $2 to $3 per kilogram price of hydrogen eventually. But right now, there is a compelling case to transition to hydrogen purely because diesel and hydrogen are on a par. So on a fuel cost alone, that transition can take place.
Thank you, Geoffrey.
Jeff, one question that's come from the audience, and probably I can also help, is who are the top ASX-listed companies leading the charge within the green hydrogen space? And what should investors take into consideration when seeking investment exposure to the hydrogen economy? I know there's companies like GV, there's companies like PRL, there's company essentially, I mean, the Woodsides and the larger groups as well are moving to hydrogen. So probably just an open discussion. I mean, what's your view in terms of the ASX-listed companies that you're talking to or have been? And what are the opportunities or the risks that investors should look at?
Sure. The ones that we're talking to, Niv, and it's a good question, the ones we're talking to are Ampol, because we're keen to have Ampol as a partner in our Melbourne Hydrogen Hub project and our H2 Tas project down in Tasmania. We're talking with Woodside, who've got grand plans to be a player in the new fuels sector. They've got a new fuels division at Woodside that they've invested significant money in. We're also talking with companies like APA, one of the biggest gas line companies in Australia, as well as AusNet. AusNet is a gas and electricity distributor and transmitter, so another large company that we're in discussion with. And we've also had interaction with Fortescue. Twiggy Forrest and his company has announced that they're going to be part of the hydrogen movement as well, and they're looking at large-scale export projects. But at the same time, there are other listed companies that have got interesting technology or interests in hydrogen. Hazer is one. Their technology will actually take natural gas and deliver hydrogen from natural gas, and instead of the CO2 being emitted or having to be sequestrated in some way, the CO2 is actually captured to make a graphite. To make graphite, which is a marketable product. So their technology is pretty flash. It's in its earlier stages, but we think that it's got enormous potential. Then there's companies like GEV, Global Energy Ventures, who are developing a ship or ships to be able to carry high pressure hydrogen as a gas. To distances of up to 4,000 nautical miles, which would take hydrogen from Tasmania or Victoria to maybe Singapore, from the northwest shelf of Australia to Japan and Korea. They could certainly be delivering hydrogen from Canada to the United States, which would work very, very well. And we're in constant discussion with GEV in that regard. There's Province Resources, there's Renew Energy, there's a number that have realised that hydrogen's the great opportunity. But in terms of what investors should take into consideration when seeking investment exposure to the hydrogen economy, we'd welcome their investment in Countrywide Renewable Hydrogen, because we're going to list our company hopefully by the end of this year. But they should look towards organisations that are focused on not only having the pillars of access to renewable energy, long-term supply of renewable energy, guaranteed renewable energy, off-takes, and a viable location with government support for a project. if they've got all of those pillars in place, then and they've got the wherewithal to bring those projects to fruition, and are also working with partners who could be significant investors in those projects, investors with strong balance sheets, I think that probably that their investment strategy would be rewarded, because hydrogen will replace diesel and petroleum, and it will start to displace natural gas as countries head towards this emission-free target that most of them have got of 2050 or earlier. Some countries have got as well, and hopefully Australia will adopt a similar strategy in the not-too-distant future.
And Richard, one final question for you perhaps. So with the generational ESG shift that we see happening and the increased focus towards, sustainable packaging solution across multiple sectors, interested to see, to hear from you, who are some of the major ASX listed companies seeking to tackle sustainable packing solutions?
Good question. I think SECOS Group are the only listed ASX company that produces compostable packaging and develops it and manufactures it in Australia. But I think most ASX listed companies these days are playing a role in tackling sustainable packaging solutions. I know that from my experience 10 years ago, when I would approach a company that would advertise on their corporate website about how committed they are to sustainability and the environment, I'd find that there was no one in the organisation to speak to, and I would have to speak to the CEO or someone on the board to try to sell our products to their organisation. The difference now is that most ASX companies, particularly the larger ones, I don't have to speak to the CEO. There's actually a sustainability manager and there's a sustainability department. So there's been a massive shift across most ASX companies that aren't just publishing stuff on their website. They're walking the talk. We're having great experience with Woolworths that demonstrating a strong commitment to sustainable packaging and going on that journey. And we're seeing more and more companies making a real commitment to change, and it's a really positive thing.
Thank you very much, Richard.
Cath, if I could just add one quick other comment. Many companies that we speak to are doing exactly what Richard's saying, and the reason that they're doing it is that they know that they become much more attractive as investments. They are much more attractive as employers, and they're much more attractive in terms of being able to promote themselves among their customers. So having an ESG mandate is something that's really critical for most companies.
Couldn't agree more, Geoffrey. So this now concludes the first of SelfWealth's sponsored ESG webinars. I hope that you will join us. We are the first, we are the green online trading platform in Australia. I would like to thank my co-panelists here today, Niv, Geoffrey, Richard. Thank you. Thanks especially to Geoffrey and Richard for really setting the way in terms of ESG companies based from Australia. And thank you to everyone who has joined us today on the webinar. Thank you.
Thank you.
Thanks, Cath.